So, Mark, let's start with that Trivago weakness. Facing some structural headwinds, how do you plan to meet those?
Well, Trivago, I would say, is just in a transition period right now. A number of their larger advertisers have pulled back a bit on their spending. That's given an opportunity for some of the smaller advertisers to step up. But unfortunately, the overall monetization of the platform is a little bit lower than it has been. So we're going to get through this in the back part of the year. The bottom line, though, is that it's a great platform for advertisers to advertise on, and it's a very popular service with consumers. So we're optimistic that things will get better as we move through this period.
Well, now, also because of your investments in the likes of HomeAway, profit has come under a little bit of pressure. How do you plan on making HomeAway add to your profit and to your bottom line from, the next quarter and on?
Well, HomeAway is actually on a great trajectory right now, both in terms of top line, growing gross bookings 46% year over year, revenues looking very solid, property nights up about 36% year over year. The issue with HomeAway is not really an issue. They're a very highly seasonal business, so we pay for marketing in the first quarter, we generate strong bookings like we did this quarter, and then ultimately people travel in the summer, and that's when we recognize the revenue. So we feel very good about HomeAway's trajectory, both on the top line and on the bottom line in the full year, and I think HomeAway will certainly show that to be true as we move through the year.
When will it be fully integrated with the core platform?
Well, HomeAway, we're going to operate generally on a pretty standalone basis, but what we are doing is making HomeAway properties available on the core OTA brands such as Brand Expedia, Orbitz, Travelocity, Hotels.com soon, for example. HomeAway itself has about 1.6 million online bookable listings. We got about 175,000 of those now live on Brand Expedia and other associated properties, testing with what works, working through some of the issues, and we do expect that 175,000 number to climb pretty steeply as we move through the year.
So you've got success, obviously, in large M&A. What should we look for going forward? More deals, more acquisitions?
Well, certainly deals are in our DNA, so we're always on the hunt, but we're also very disciplined. Over the course of the last number of years, we've built an absolute incredible portfolio of some of the leading brands in travel. Right now, we're in a position where we really don't need anything else to be, successful and to deliver on where we want to be. So we're very focused on making the most of what we've got, making sure that we are being locally relevant on a global basis, going into countries and building incredibly powerful network effects for both suppliers and consumers, making sure we're incredibly customer-centric, and making sure that we can increase the speed of execution and innovation across our brands. So we're focused on solid execution, but we will continue to be opportunistic on the M&A front if we see something that's attractive and fits in nicely.
Talk to us about your marketing spend. So the way Booking Holding has been pretty good at that, how do you plan to make your marketing spend work for the rest of the company, Expedia overall?
Well, we've been at this game a long time, both in terms of just online digital spend, but also in terms of television spend. We're highly analytical in the way that we approach it. Last year, we spent well over $4 billion on direct sales and marketing. This year, it'll be significantly more than that. But we're also always looking for ways to make sure that we get the absolute most out of our marketing dollar. Over the course of the first quarter, we were a little bit more disciplined in making sure that we could prove to ourselves with real math where we were actually making appropriate returns on our marketing and spend and where we weren't. And I think that's going to be the course for the next, go-forward period, just being an inch more disciplined. But we're confident that all of our marketing spend is smart spend, and we're just looking to get a little bit smarter. Yeah,
does that include a position on the likes of Facebook and on other social media spending? Do you plan to reduce that in any way, especially given, the scandals that we've seen over the last several months?
Well, we have no plans to reduce our spend in these large platforms. The bottom line is that Facebook continues to be a very attractive platform where consumers are. There are a number of other large advertising platforms out there where, again, people who are thinking about travel, whether they're dreaming about it or actually about to make a trip, are present, and we want to be there. So, obviously we're very cautious and we're very concerned and we're very focused on making sure that consumer data is dealt with appropriately. That's always been the case. It continues to be the case right now. But we're looking to spend more on these channels, again, assuming that we can get appropriate return.
So international bookings growth remains pretty strong. Domestically, we're seeing a little bit of a deceleration. Is this Airbnb? Is this, hotels making better offers, other apps? What do you attribute this to?
No, I think we feel like the domestic market still continues to be very healthy for us. The numbers we look at continue to suggest that we're growing at rates, 2 to 3 times the overall industry. From quarter to quarter, you can see movements. For example, in the first quarter, because of Easter timing, this year versus last year, we did see, Easter come in a little bit earlier, and when people are on vacation, they're generally not booking travel. So on the margins, there can be moves from quarter to quarter, but really we feel very good about our domestic progress and feel very good about our position in the U.S. and the growth rates we're seeing.
Mark, briefly, what is your target set on when it comes to Washington, D.C., policy, regulation? What are you watching most closely over the next few months?
Well, certainly we're watching the outcome of the travel ban, which is ultimately going to be decided by the Supreme Court in June. Obviously, we're a travel company, so we're interested in that outcome and wanting to make sure that not only do we have secure borders, which we absolutely have to have, but that we are appropriate in representing our brand, the brand of the United States of America outside the U.S. Tax reform generally has been a positive for us, and generally we're looking for things that put more dollars in the hands of consumers. Generally find in the U.S. and increasingly around the world that one of the first things consumers want to do when they get an extra dollar in their pocket is take a trip.